They currently offer everything Vanguard does and more, and for a cheaper price. We're coming to the end of the tax year, so it's that time again when all investors are trying to look for the best place to store their ISA for the year ahead. With commission-free trading now cemented within the world of investing, this year has been particularly difficult for me to decide where to hold my ISA for the 2022-2023 tax year. There are certain investment platforms and apps that I don't even consider because of the crazy sky-high fees that are charged. For example, Hargreaves and Lansdown, which charge an absolutely ridiculous amount for their share dealing. However, there are lots of different platforms out there that are very, very good and competitive at the moment, so it's been the hardest year for me so far to decide where to hold my money. There's Vanguard, Trading 212, and now new kid on the block, InvestEngine, that unless you've been living under a rock, you'll have seen thousands of people talking about on YouTube in the last few months. Ever since I started investing in May of 2019, so almost 3 years ago now, I've held the majority of my investments through the Vanguard platform. And this is where I've held my ISA for every year so far. Today then, on the eve of a brand new tax year, I'm going to try to give an impartial, open and transparent review of my options for my ISA for the 2022-2023 tax year. We'll start off then with the old faithful Vanguard. Vanguard is well known to many investors as the home of index and ETF investing. Well established now within the UK and with ever-present marketing, it's a secure and trustworthy place for you to place your hard-earned money. There are absolutely no fees for holding your ISA with Vanguard, unlike places like Freetrade, which charge £3 per month for the ISA wrapper. However, there is an account fee of 0.15%, and that goes for any money that's held within a Vanguard account, either an ISA or a general invest account. So it is still incredibly cheap, but it is by no means the cheapest anymore. Vanguard has been going for over 45 years now, and it's currently got over $7.1 trillion in assets under management. It is an absolute Goliath of the investing scene. I absolutely love Vanguard and their products, but there are a few things that I think Vanguard could do to improve to make them that little bit better. Firstly, you can only hold Vanguard products within a Vanguard ISA, which in the UK limits you to just 79 products at the moment. For me, this isn't a problem because the 6 ETFs that I invest in are all held on the Vanguard platform in the UK anyway. However, it would definitely deter others from holding an ISA with them. There's also no app for the Vanguard platform, which, to be honest, in the 21st century does leave them way behind any of its main competition. Most platforms now have an app which can be downloaded via iOS or Android, so Vanguard really is left in the dust here. The performance and tracking capabilities are very good, and this is something that I think sets Vanguard above a lot of their competition. However, on the platform, you cannot invest in fractional shares, which is something which holds it back when compared to the likes of Trading 212, Freetrade and InvestEngine. There are only certain products from the Vanguard suite of funds which are available on the UK platform at present, which means that UK investors are held back when compared to the platform which is available in the US version of Vanguard. And also Vanguard, as of yet, don't offer a pie-like feature allowing you to control your own portfolio, like Trading 212 do and like InvestEngine do as well. Vanguard then seems to have been left a little bit behind by its newer, more modern counterparts. It's definitely not the fee-hungry relic that some investment platforms could be argued to be. However, it is definitely in need of some modernisation within some areas of the platform. InvestEngine is the new kid on the block, and it's been discussed absolutely everywhere on YouTube, blogs, podcasts. If you're into investing, you will have heard of this new disruptor to the area. This platform offers an ISA with absolutely no fees whatsoever. The only charges you will pay is for the OCF of the ETF itself, and that would be paid no matter what platform you hold them on. So InvestEngine is the cheapest or equally cheapest out there on the market at the moment to hold any ETF in. You can even hold Vanguard's own ETFs and invest in the same portfolio that you would be investing in on Vanguard, but for cheaper, so 0.15% you'd be saving every single year. At time of filming, they offer over 500 ETFs, including Vanguard's and Invesco ETFs, and this is compared to the 79 which are currently offered on the Vanguard platform itself. Here you can invest in fractional shares of any of the ETFs on the platform, as well as creating your own pie like you would see on Trading 212. Weightings can be easily set and then rebalanced at the click of a button. There's absolutely no need to get your calculator out like I'm going to have to on Vanguard. And it even has its own app for any smartphone out there. It is a very, very tempting platform. There's a lot of hype around the platform at the moment, with many Vanguard advocates considering moving to InvestEngine, and I can see why. In essence, you're saving yourself 0.15% per year, which might not sound like a lot, but over 20, 25, 35, maybe 40 years, this can amount to a substantial amount of additional capital within your portfolio, which can continue to be exposed to the compounding effect. Customer feedback is excellent so far, and InvestEngine are FCA regulated, and any investments are covered under the FSCS Financial Compensation Scheme up to £85,000. So your money in there is relatively safe. Having only set up in 2019, it is still a very new platform when compared to Vanguard. And personally, I would not be at all surprised if we see a lot of money now move from Vanguard across to InvestEngine from this tax year, or definitely when the ISA year begins. My main concern with InvestEngine at the moment is that they are relatively untested. Having only 3 years in the investment space, there's a lot that they can still learn. We've seen lots and lots of platforms come into the investing space recently, things like Trading 212 and Freetrade, which have done incredibly well. But Trading 212 has had its own issues, with it not onboarding new clients for over a year now. While I've got absolutely no evidence to suggest that InvestEngine will have any issues at all, for me, I need to feel confident in where I'm putting my money. And for me, they just haven't got a proven track record yet, and they haven't got the years in the market for me to trust in them like I do in the Vanguard platform. Trading 212 is of course the final competitor, offering a very, very tempting ISA. And now for me, I could invest through Trading 212 because I've already got an account, and I fully appreciate there's lots of people out there who still have not been able to access the platform. So if you haven't been able to access Trading 212, you can use Freetrade as a next best thing. They do charge that £3 for the ISA, but they are very, very similar to Trading 212 in every other way. Trading 212, again, like with InvestEngine, has absolutely no platform fees whatsoever. So the ISA is essentially free, and the only thing I would be paying again would be the OCF of the ETFs that I invest in. It does also have one of the largest selections of ETFs and individual stocks and shares currently available within the United Kingdom, which does set it above a few other platforms out there. Realistically, Trading 212 would be the ideal platform for me, and this is because it would allow me to pool all of my investments in one place. My Trading 212 portfolio is currently valued at over £4,100, with my Vanguard platform valued at over £11,000. So if I could pool all of that into one place under the same ISA tax wrapper, it would mean that I would never have to pay any capital gains or dividend tax on any of my investments, no matter whether they were individual stocks and shares or part of my 6-fund ETF portfolio. With Trading 212, you will pay a small FX fee for any investments made outside of the United Kingdom. This is just 0.15%. This equates to the same as Vanguard's platform fee, which was discussed a little earlier. Trading 212 offers pies, the ability to rebalance your portfolio at the click of a button, and has a really, really purposeful and functional phone app as well as a desktop app, which means that it is multi-purpose and multifunctional. Where I feel Trading 212 falls down is with its ability to track your portfolio. When compared to the likes of Vanguard and InvestEngine, Trading 212 just doesn't hit the spot in quite the same way. Yes, they show you the return on your investment and the current value of your portfolio, but you have to click through a few different screens to see exactly how much you've invested into the platform. And when you have a look at your portfolio, where it says invested, it actually accounts any capital gains that you've reinvested or dividends that you've reinvested into that account. So it doesn't just account for how much you've put in, how much of your capital you've put in, it equates to everything that's been bought within that portfolio, which does skew the data a little bit, and it makes it a little less effective for me than the likes of Vanguard. Added to this, the return on investment percentage is not time weighted, it's just a cash on cash return, which does mean that any new money brought into the portfolio can skew your rate of return data. Also, Trading 212 have not taken on any new clients for a significant amount of time, and whilst this doesn't cause major alarm bells, it does worry me a little bit about what might be going on behind the scenes with Trading 212. Once they start onboarding new clients, I'll be a lot more confident with the platform and know that they are in a position where they feel that they're comfortable to take on more money, to take on more people, and to manage an increased amount of assets. But at the moment, I don't see when this is going to be started again, and that does concern me a little bit. The way I see it, it comes down to what's most important to you and your investing goals. If fees are the most important thing to you, the be all and end all, and you want to pay absolutely nothing for investing, and you want to invest in both ETFs and individual stocks and shares, then Trading 212 or Freetrade are the best places to go for you. Yes, with Freetrade you have that additional £3 per month fee, but Trading 212 and Freetrade are very, very similar in what they offer and what they do. Trading 212 would save you over £9,500 over a 30-year investment period if you were to invest £300 per month at a 7% annual return. And this £9,500 comes from just that 0.15% fee that Vanguard would charge over Trading 212. It gives you the freedom to invest in exactly what you want, ETFs and individual stocks and shares. Save more of your invested capital, and it also has really nice features like the pie feature. If you're only interested in investing in ETFs, and again, fees are the be all and end all for you, then InvestEngine may be the best place to go for you. They currently offer everything Vanguard does and more, and for a cheaper price. For me, that's almost too good an offer to pass up. They even have the pie features that Trading 212 have, the ability to create and rebalance your portfolio at the click of a button, and as I've said, absolutely no fees if you use the DIY version of the platform. The flip side, and I've been thinking about this a lot, is the fact that it doesn't quite yet have the pedigree that Vanguard does. Vanguard has been around and is an institution for over 45 years, whereas InvestEngine is very, very new to the market, which means that it doesn't quite yet have the pedigree or the trustworthiness of the Vanguard platform. For all we know, there may be some bumps along the way. They may see a massive wave of capital come in, they may decide to put fees up, we don't know just yet. And for me, that is a risk that I am not currently willing to take. That leaves us with Vanguard, the most expensive of the three, with the least products on offer, and with no app. It's not looking good for them. But hold on a second. Yes, they do have a 0.15% account fee, and yes, not going with Vanguard would save you over £9,500 across a 30-year investment period. Even more, they don't have an easy way to rebalance your portfolio. They don't allow you to invest in fractional shares, and they don't even have an app. But in my eyes, they have a superior ability to track performance over time, and they have the ETFs that I want to invest in. They have an extensive and responsive customer service team and a proven track record over a period of decades. To put it simply, I trust the platform, and I need to be able to trust the platform that I'm investing in when I'm putting more money into them than I've ever seen in my life. For me, that makes Vanguard my ISA holder for the 2022-2023 tax year. And this did take a lot of thought and consideration this year. InvestEngine were a very, very close second. And I've put a lot of work into actually looking into them because I think in the future, I may well move my ISA from Vanguard across to InvestEngine, but not just yet. I would rather pay another 2 years of fees to then have the confidence in 2 years' time to move across to InvestEngine after they're a little bit more well known and they've had a little bit more time within the industry. Let's not forget, Vanguard's fees are still incredibly competitive. They are far lower than many, many platforms out there. And if that's the price I've got to pay for confidence in my investments, then I am happy to do that. They may not be the market leader anymore, but they are still incredibly competitive when it comes to fees. Looking ahead, I think it's going to be really interesting to see how platforms like Vanguard try to counter new disruptor platforms such as InvestEngine. Will they consider lowering their account fee? Will they consider integrating something like the pie features that we see on Trading 212 and InvestEngine in the next year or so? Only time will tell. But I do think that if everything stays the same, I will in the future move across to InvestEngine, and my ISA will probably be held with them. Maybe not next year, but very likely the year after. Please do let me know though, if you're currently a Vanguard investor and you're moving across to InvestEngine, please let me know in the comments below, because I'd be very interested to see exactly why you've decided to move across. Are the fees just that little bit too much to bear now? Or is there another reason that you've decided to move from Vanguard across to InvestEngine? Please do let me know in the comments below. Also remember that none of this is financial advice. This is just the thought process that I've been going through, and Vanguard is the right platform for me for the next year. I do really hope you've enjoyed this video, so if you have, please do like the video and subscribe if you haven't done so already. I really have been back and forth over the last month or two, debating whether to go with Vanguard or InvestEngine for my ISA this year. So it's been a really good process for me to do this, and hopefully it's helped you make your decision maybe as well. So with that said, I really do hope you've enjoyed the video. Happy ISA New Year. Please let me know in the comments below exactly where you're holding your ISA for the 2022-2023 tax year. And with that said, I'll see you in the next one.